Welcome to the Trading Lounge, and here we're looking at the US 30, and it's on a daily chart, and I just thought I'd start from the bigger picture here. Um, the Elliott count for the Dow for this market, for this trend moving up through here is like this. There's a lot of Elliott people that have got this top of this third wave here as the wave 5, and that's a valid count as well. But I've always just held this particular count as the bias, so to speak. So there's just the possibility of another move up through here, and I thought that I'd be able to work it out once the sort of started here, but it's just being a little bit difficult. And the reason that it's being difficult for is because the move down through here is not really clear as an impulse wave or corrective wave. They both can be counted and fit well, so it just makes it a little bit sort of tricky. So we have to be prepared for this being a top, and we also have to be prepared for this being a wave 4 here and making a new high up through here. And if it was going to make a new high up through here, then it would be the US banks that would be leading the way there. So, and I'll just point that out too. So when we have a look at say the Bank of America, for instance, here, a daily chart, you can see that we've got this, we had a little 5-wave structure down here, and I thought, well, that would suit the top at the Dow and all the rest of it, and it had 5 waves down, but it had this 5 here, then a move up and move down. So we've got a very sort of clear 5-wave structure here, 3-wave structure. So if that's the case, now this has moved up through here, it means that top there is going to be taken out. So that's why I feel that the sort of bias, for the Dow and S&P to go higher, led by banks, and that's pretty much the same story with the Australian markets as well. We can have a look at if we started from the bigger picture here. This is the just a very simplistic chart, an Elliott count, and we've had it here for a long time, but I just haven't updated it. But essentially from the low from the big bear market that we had, we've been looking for an A and a B and a C wave up, and the C wave would pull back up to 61.8% of the bear market that came down, which would leave us around the 5,400, so, but take all those highs there with a pinch of salt. Our aim really has been to count 5 waves up from this this B wave here, because C waves have got 5 waves in it, and it just really appears with the banks that in this 5-wave structure up through here, I mean, we're at 5,000 now or thereabouts, in this structure moving up through here, it's sort of like we're at wave 4 and we've still got wave 5 to move up through there, and that would be the same as this market really. So when we look at, we just go to a bigger picture here. Okay, look, this is just the daily on the ASX, but this move up through here, I won't go into counting all that, but you can see that this is a nice strong wave structure here. So it's it's like a 3rd wave. So the 1, the 2, the 3, the 4, and then the 5 up to this sort of 5-4 mark up through here, if that's going to be the case. Now, what we were looking for here is, because we had a reasonably sort of clear 5-wave structure to the downside here, and so that would be this little 5 wave down here. And then we were looking for 3 waves back up through here to the 61.8% as a B wave. And then we were looking for a C wave to come down through to here as such, like this here. And then once that's completed, then we'll look up. That's the normal textbook sort of thing that we were looking at through here. This does count as 5 waves down here, better than it does count as 3 waves down through here. But, you could count it as an A wave, a B wave, and a C wave here, and then would be pushing up in 5 waves here, and in that pushing up for 5 waves, it would be, it would be something like that, so to speak. So we just need to be a bit careful if we've got this 5-wave structure here or we've got this structure here. But when we look at the banks, you'll see it's more likely that we're going to be pushing up through here. So yeah, look, if we just give me a second here, we'll just have a look at A and Z will do the trick. So you can see that that it's that it's leading up strongly through here, and it does appear that we've same sort of structure here. So it does appear that we've got up for one here, back for two here, third wave moving up, a fourth and a fifth moving up through here. Of course, ANZ will sort of have a bit of trouble at 30, so to speak, so there'll be sort of corrective patterns through here, and that will lock, that type of price action will lock the ASX 200 in at 5,100 for the time being. So what we're looking at here, I just need to point out too, if I just go back to the American market, sorry for chopping around a bit, I'm just trying to piece together a bit of a story here, so to speak. On the Dow Jones here, if we just go in this a little bit further through here, it's just a 2-hour chart here. On Friday night, it doesn't look like it here on this particular CFD futures market here, but on the close for the Dow Jones and the S&P 500 on the cash, or the actual index itself, had a very clear 5-wave structure to the downside here. So this closes a bit later, so it's had a bit of a rally through here, but we can expect that to move down a little bit. And what that will mean for the Australian market is that we've got this move down through here. We've got this little rally here, so we could be moving back into the 5072 sort of group 2 area here before we see further upside here. And the banks have kind of got this same picture as well, where, like we just saw with ANZ, that at the top of a third wave, and they've got a fourth wave to sort of unfold here. The market should open reasonably flat this on the Monday, but that said, they've got a bit of a mind of their own as well. We do have China closed, we do have Japan closed on the Monday. In fact, China's closed all week, so there's not going to be sort of any leads from there. And just while we're here as well, looking at the China CFD here from this particular low point that we've got in through here, is that we were tracking a little 5-wave structure up, which we've got. When we had that 5 waves, we knew that we'd get another 5 waves, and that's what's happening at the moment. But we can't go past that in understanding it. So we can have this up for an A and a B and a C wave up through here, or it can be up for 1, back for 2, up for 3, coming back for 4, and then up for 5. And if we do get that 5 waves up there, then it's really going to put a stronger, more positive picture on the Shenzhen and the Shanghai and so forth, and then that will reflect back into the other Asian markets as well. The European markets are pretty much the same as well. Just clean this up a little bit through here. We can see this, the FTSE here. We know that the market's come up to 6,500, a medium level. It's having its corrective pattern here, and we're just starting to see from this low here a possible 5-wave structure to the upside. That can be moved across to that little point there. We've got the 1, the 2, and the 3, and the 4, and the 5 up to here. So then we've got the 4th here. And if we do get this 5th wave up through here, if we get 5 waves here, then we're going to get an ABC across here, and then we're going to get 5 up as well. Now, the important thing about this is that the FTSE and the ASX 200 do have a relationship, and they in fact probably closer relationship between those two than the US market. So look, if we get that 5 there, then we know that we're going to be going up further, and that's also going to sort of bolster up a bit of a bull run in the ASX 200 as well. Anything to sort of add there? No, that's pretty much it. So just going back to the US markets here a bit as well. We're not quite just. This is what we've got to kind of figure out. This is the problem here. So you're going to see intraday wave counts on our service that will have 2 possibilities. Hopefully this should clean itself up very shortly, but we just got to kind of work through. It. It's just one of those rock and hard place, so to speak. With the Australian market as well, we've got commodities who are slightly softer. Let's have a look at those. Okay, just before we look at the commodities, I just want to have a look at BHP in the US and also Australia as well, because there's a likelihood of a stronger rally to the upside, and where that would come from in terms of coming down from the 80 here in the US BHP is pretty much down for 1 and back for 2 down for 3 with 5 little waves in here, and back for 4 and down for 5 here. So just really been, I could see what was going on, but what we wanted to find was good support on 65 if that's going to be the case. So if it does maintain support here, then we can expect some sort of rally, retesting the supply levels up around the 72 mark there, and that would also be the same for the Australian market off the 30 here as well. Now that little price has jumped up through there, it's given a good dent back into this trend here. So we're expecting it to come down to the 30. It's close enough. But look, that 5-wave structure coming down through here pans out quite well, so we can expect some sort of rally here. And what that will do, of course, is once we've got banks and material sectors working together, then we're going to see the ASX move out a little bit quicker from that point. So looking back at copper here, this move that's moved up through here, it can also be counted as an impulse wave as well. I understood, once again, coming down to $3, $300, depending on the contract size, whatever. There'll be a bounce off here, and in fact, we knew that coming into Group 1 here, 30, 20, and 10, that the market would bounce around a lot coming into Group 1. So this pivot within Group 1 here is really important, because if this becomes the resistance through here, then we know it's going to be rolling over further to the downside. If it finds support there, then it's free to go to the upside. It's not totally free to go to the upside, because Group 1 is also really important, as you know, and support here would see it further to the upside. But we do see a little sort of positive structure through here, so we're likely to see some sort of 3-wave pattern across here. After we get those 3 waves across there, if that's going to be the case, and then it finds support on here, well, then we know we've got a positive situation, and we'll have a positive situation for the corrective rally for the BHPs of the world and so forth. There is a slight sort of problem with that scenario, and that's with the US dollar. So with the US dollar here, so we'll have to go to the FX section to get the wave count on it, just on a different template. But bottom line is that we're looking for this to move up through here, have some sort of reaction up here, pull back, however far it comes back, the 40 to 60%, whatever. But if it moves back up through here and finds support on the 83, which we're assuming that it's going to do, because the bonds and the US bonds and US notes and so forth are moving to the upside, and we can look at those when we have a look at the FX section. But the bonds and the US dollar will be in line with each other. So we're expecting them to move up, and if that is the case, then obviously that's going to put pressure on the current corrective rally that would be moving to the upside. So that's the bonds, and the bonds are already leading higher, making new highs, so the US dollar should sort of follow. The interest rates are moving lower, which we can just have a look at here for a second. Let me just find... Okay, so this is US interest rates. So they'll be doing the opposite to bonds and US dollar. So we can see a couple of things here. We can see that this move up through here, as we've sort of mentioned before, but it is corrective because it's in 3 waves. So yeah, and also here as well, it's had its retest at $3 here, and you can see that this is all sort of corrective here. Yes, there will be support because it is coming into sort of new lows here in the 280 and so forth here, but the interest rate here should be moving down further, which will obviously lift the bonds up and the US dollar up. So there's a lot there sort of, driving, the sort of commodity market from the back end, so to speak. So that's how we're sort of arriving at that. But things are in a bit of a rally. So when we look at oil here as well, look, I'll just keep it really sort of simple here for the oil. If we've had this particular correction through here, And if support, now that it's tested lower on the 83, it's done its, three-wave correction. If support is found on the 93 here, then we're going to see further moves to the upside. Up to support on 93 will get you to 95. As simple as that. And of course, that's going to see Woodside push higher as well, which it has been pushing higher, and will continue to do so. The gold market, there's a couple of ways to sort of view this here. But look, I think the main thing to normally when you see a sharp move like that, there's always a rally coming back over it, and these rallies normally run out of speed. So we're still going with this, even though it's quite high here, we're still going with it as being corrective. I have labelled this in a slightly different way if it's of any interest to anybody, in terms of the 1 here, the 2 here, and then the 5-wave structure down in terms of the 1, the 2, the 3, the 4, and the 5 here, and that gives us a 38.2 retracement level back at 1500 here, which I think is reasonably interesting as such. And it normally is the 5th wave in, not normally, but at least the third wave is normally the extension in stocks, and it's normally the 3rd wave in commodities as well, but it can equally be the 5th wave with the extension in it as well. So we're still treating this here as a rally through here, and once as I mentioned, the dollar and the bonds and that push higher, then it's going to put a lot of pressure on it towards the 1500 here. In terms of day trading from here, of course, if you wait for support on the 1472, then you can trade up to the 15 there as such. And this is the structure here, so on a 1 hour chart. So support on the 72, you might even get it at the 65 here, 72 and so forth up to that way there, and you'll be looking for 5 waves up there. So from this point here, we've got a little 5-wave structure here for 1 and back for 2, the 1, the 2, the 3, yep, and then there's an extension in the 5th here for the 3rd, the A, the B, and the C here. So if it's going to be retesting supply at 65, then 72, and of course 80, they're all going to give you a bit of a brick wall, but support on the 72 is your safest bet. You can have a crack at it from this point here, but you could certainly trend higher. Normally the C wave here would be more lazy on an angle, and that would tell you that it's got strength to the upside, but being sharp like that, and if it follows the indices, and the indices, Dow Jones had 5 waves coming off its high on the close, so we just need to be a bit careful there. So do wait for good support from that area there. Let's have a look at FX. Okay, starting with the US dollar here, this is our current count at the moment in terms of wave 1 up through here, and a wave 2 to come back through here to the sort of 50-60 odd percent area through here, and then a move up through here. So look, once the if you're intraday trading and you're shorting the euro or something like that, then the 82.72 through here, the 82.72 would be a very important trigger to be aware of, to be like short on the euro at a breaking of that. You just got to also bear in mind too that this particular correction that's come down through here, and we've got this as an A and a B and a C here, just got to be a little bit mindful. If this does come down here further, then we have to, because this is all about the correction across the 83 here, which is the top of minor group 1, and support on minor group 1 would see a higher price, so support on 83 would see us at 85, so it's quite a big move to the upside, but we just don't want to get too excited in case we get caught out, and we'd be caught out in the terms of this move down through here being an A wave and an alternative B wave here, and then 5 waves down for the C wave, and then we would move up from that point there as well. So we just need to bear that in mind. We're either going up from here or we're going up from here, and this is our sort of preference sort of area from here. And one of the reasons for that is that, as I mentioned before about the bonds market, if we have a quick look at the US bonds here, we can see that this sideways pattern here, markets that move up and go sideways continue to go up. They're just continuation patterns. So we can see that this is still moving up. 150 would be the medium level up here, where it will have some problems up through here. But the US dollar should follow that to the upside. So that's kind of one of the drivers behind this situation. And of course, that would leave the euro to the downside. So if you look on our website where the euro charts are, the intraday, you'll see two intraday possible wave counts. One of them is that it pretty much drops from here, and the other one is that it comes up to here first, a little bit higher, then drops off. What we're seeing through here, though, is we're seeing all these moves through here. They're all an A and a B and a C. They're corrective rallies, the same as this one here is a corrective rally as well. But look, if you've got to trade what you see. So the Elliott is suggesting to the downside. The 130 is obviously top of minor group 1 as a really good support. And if support was found on top of micro group 1 here, subgroup 1, micro group 1 rather, which is the 1.330, then you'll be looking to the upside. You want to trade that to the upside, but you do want that as support there. At the moment it's resistance. It's got to go up and come back and check on it. And once it's checked, then if it breaks up, that's fine. Like here it moved up, checked on it, dropped down, bit of a problem, retested, moved back up, retested supply, failed at that point and moved down. So now it's having another crack at it. And it could easily go through this time because we've got a bit more accumulation here. So the size of the accumulation period through here would normally equal the distance it would move to the upside in unit for unit, Richard Wyckoff's work. So just be sort of aware of that. This is just on the 5-minute chart here. So you want that to move up there, come back and sit on it, and then move up from that point if you're going to go that way. But we do see all these rallies as being corrective rallies. So the proper short would come from the 130 as a retested resistance at that point there. All right, the Australian dollar. We can count that we've got an impulse wave to the downside. So we're a little bit sort of confused in here, but what we can see so far is we can see that we've got down for wave 1 and wave 2, wave 3, wave 4 and wave 5 to this point here. Okay, now it's probably there's probably a way to count it that the whole 5 waves will actually come down to this point here, and we're seeing an A and a B and a C rally back up here, because once we've got 5 waves down, then we would see a rally coming back up. If we took this as the 5th wave here, then we'll take the 61.8 retracement level from that point. So we would be looking from here to here, excuse me, there to there, and we'd be looking at a 50% retracement level, 61. So we'd be looking back up here for that corrective move as a wave 2 before it went to the downside. That's what we'll be looking at through there. So a little bit tricky. I mean, we could move this, down to here, so to speak, and then it's lower to there. But so not quite sure about what to do about that. We have got it labelled as the wave 1 coming down to here, the A wave to here, the B wave to here, and looking for a C wave back up into this area here again. The 103.50 would even be fine, So point being is that we are in a corrective rally through here. So we just got to, it's obviously going to follow the copper market as well. We also know too, and we've mentioned it before, is that before we got here is the 102.72 here. That would be the a really sort of guiding pivot within this pattern that gets created here, and given enough time and patience, basically, we would end up seeing, we would as support or resistance. So this is just on the 30-minute chart now, the 102.72 there. It's doing its job, basically, and the market still hasn't decided to have it as support or resistance yet. The move up through here counts from this current low here. We were looking for a C wave up through here in 5 waves, and it doesn't count that well as a 5-wave structure. It counts better as an ABC in terms of, yes, we got 5 waves up here. We can count that as an A wave here. This down from a little A wave, a B wave in 3 waves, and a C wave in 5 waves here. So basically an A and a B, and then the C wave up through here in 5 waves, the 1, 2, 3, 4, 5. So that could just be another A wave, do you know what I mean? So we could just put this here as the possible A wave, and a B wave is always in 3 waves, so that would be there. And the B wave, well, a bit small, sorry, but I won't worry about changing it right now. The B wave is normally a 5, 3, 5 structure, and this fifth wave, 5 waves not finished here yet. So 1, 2, 3. The fourth wave being sideways and complicated, coming into the end of the session, day, whatever, week. So it's likely that we do see a little spike down here to sit on this trend line through here, perhaps at 102.60, might spike to the 102.50. But once it's got that, then we should see a 3-wave corrective pattern come back up and retest this here. But depending on how far this drops down here as well. So if this just drops to here, then we'll see that move back up to 103. But if it drops much further through here, then when this comes to retest time here, then it will probably only retest the 72 before it rolls over again. So yeah, not sure what to say or do about that there, but what I could say is that if 103 became the support, then look to scale in through these levels here, and you know the old story, if the top of group 1, 1, 2 and 3 here, if that finds support, then tested support, then you'll be looking further to the upside there. The wave count, generally speaking, is down. We just got to keep an eye on, we've just got to work out what this correction is in a bit more detail, basically, to see what it is. But yeah, so just we're not going to see a lot of movement here anyway on the Monday with China closed and Japan closed as well. It's probably a better move in. Oh well, yeah, that's closed too. So. Alrighty, well, that's about it. Just give this a little bit of time and it'll work itself out and we'll be able to get a clearer wave count on that. So, look, unfortunately, I don't have a clear count on this. I don't have a real clear count on the US indices as well. But if the banks are leading and doing what they're doing, like the Australian banks, we should see new highs across those markets. Yeah, so that's really about it. And as I mentioned with the banking, this is the banking sector here, the Australian banking sector, the XXJ, and it's moving up to the medium level, 6,500. So we're bound to see some sort of retest into this here before we see sort of higher ground here. That said and done, just looking at the volume through here, we can see that a couple of things here. We can see that we've got a nice volume spike here on this nice strong bar here, so that's nice, makes sense. On this down bar here, we got lower volume than the previous volume bar here, so we know that move down here is just corrective. But look, just I know everybody trades different banks and so forth, but this is a bit of a mix of all of them, so it's really if it does come down, you're looking for that support on the 6,500 there as such. Yeah, so all good from that point. Alrighty, well that's it. Good morning and good luck and enjoy the day ahead.